In the meantime, let's bring you more analysis. We've heard today the Reserve Bank Governor Philip Lowe saying that he's confident that he could enact the recommendations made in a major review if his term as governor is extended. Those recommendations including making the central bank more transparent and independent. Let's bring in Jo Masters. She's a chief economist with Barrenjoey. Jo, appreciate your time. Thank you. A huge change we've heard about today is splitting the RBA board into two. How would that work, and is it a good move in your view?
So there's a whole lot of recommendations, but as you said, one of the big ones is to take the role of setting monetary policy, so that's setting interest rates and considerations of financial stability, into a specialised individual board. Now, we do know that other major central banks have that framework, particularly the Bank of England and the Bank of Canada. And I think it broadly makes a lot of sense. As the governor mentioned in his press conference, the Reserve Bank of Australia has a whole range of things that they do. They're the banker for the government. They issue notes and coins and passports. They have the payment system, and monetary policy is one aspect. So to pull that into a board that is very specialised, more focused, has more time, I think will deliver good results going forward.
We've heard about some measures as well aimed at bringing more transparency to the whole process. The RBA governor would front more regular news conferences, board members would have public speaking engagements. How do you see all of that impacting decision making?
I actually really welcome those initiatives, and also the one to announce in the post-meeting statements the balance of votes, so that people that are watching the RBA can get a sense of how close a vote was. And again, we see that in many of our global peers. So what we really want to do when we step back is have more frank and fearless discussion and debate at the monetary policy level, and then communicate not just the decision, but the thinking behind the decision, and also important, the evolution of issues that are coming through the economy or risks to the economy. So I think that transparency and openness will deliver better policy outcome and will help those that are watching the RBA and responding to the RBA have greater understanding about their reaction functions.
Do you think it's feasible, Jo, for Phil Lowe to remain on in the job and be the person that actually implements all of these changes?
Look, I think that's a really hard one to answer. But what I would say is that when you look at the recommendations from today's review, there's 51 of them. The Treasurer has backed all of them. Some sit with the Treasurer, some sit with the Reserve Bank. This is a material change to the Reserve Bank, not just the monetary policy setting that we've talked about, but a lot of internal processes that need to be thought about and to be executed. So you really do want a steady hand. Now, there's lots of people within the RBA. The governor is one of them. But I wouldn't rule out perhaps extending his term for a period to just see the RBA through this enormous amount of change. We've heard from the review that they recommend that the changes that require legislative change, and that does include splitting the board into governance and into monetary policy, are all effective from 1 July 2024 to give the bank time to work through those changes. So that is one possibility, that the current governor's term gets extended till then so that he can see through the bank through this time.